Alright, welcome back to MMG and WPC. So, I'm going to talk about the stock market, and there's a lot of big things happening, like antitrust against monopolies, which I've been ranting and complaining about for years. First of all, this is not financial advice. I am not a licensed financial advisor. Consult your licensed financial advisor, and do not invest anything you're not willing to lose sleep over. Stocks, equities, they're all extremely volatile, extremely risky. And this channel is more about trading and me ranting. So I'm going to play this real quick.
Dealing with matters of technology in the digital age, for addressing businesses with network effects such as those we find in the digital platforms, and for bringing antitrust cases even with respect to products that are nominally given away for free. So in that respect, I think the Microsoft case is an important precedent, and he was correct to emphasize that.
Doug, is it odd that all of these companies, Apple, Google, Facebook, Amazon, you can count some others, are being scrutinized at the same time when their business models are so different? And it's not illegal just to be big.
No, it is not illegal just to be big. A violation requires proof of anti-competitive conduct. I think there's a broad...
First of all, I do agree there's a few things the government does do right, which is break up monopolies. But we wouldn't have monopolies if it wasn't for government regulations. You have to understand regulations. They cause a barrier to entry for smaller companies to grow into mid-sized companies, which then can compete with extremely large companies and monopolies, right? So in a fair and just world, there wouldn't be regulations to stop smaller companies from competing with the larger companies, because as corporations and companies become larger, they become increasingly more complex and more bureaucratic. And when they become more bureaucratic because they're so large, they lose their edge over the market, and then smaller companies come in and take advantage of that unless there's regulations that do not allow them to actually grow. Like, for example, it's really hard for small companies to raise capital to become mid-tier companies. And also with all the red tape and it's really costly for them to compete with larger companies. For example, like right now with cryptos, they're coming out with these regulations, right? Well, these exchanges that currently exist will not be able to compete with large brokerage firms like Fidelity, Merrill Lynch, Options, Express, all the other brokerage, TD Ameritrade, all of them, because they cannot handle the overhead expenses, and you have to hire lawyers, accountants, and it's massive amounts of secretaries just to handle everything. So let's continue here.
Populist sentiment in the country, a concern about private aggregations of power that's exacerbated by the tech platforms because they have seemingly boundless capacity to grow by network effects and scale economies because they're newfangled and invisible technology. And perhaps most important, because they implicate other values such as privacy and sort of communications and political community. So it's not surprising that there would be a hard look at those platforms, each of which in its own way has been an aggressive competitor and does seem to have a considerable market clout.
All right, first of all, these megalith monopolies, they have lobbyists, right? So they hire people to go and buy off politicians and give them money, and they write up the regulations for themselves, but really they're writing it up for their competitors. So they get keep that monopoly, right? Now, the concerns here are that these companies are just gathering people's data, selling it to the highest bidder, and for one, breaks the law. You have privacy issues like Facebook, right? And they're also censoring freedom of speech. So, and they're becoming, a lot of these corporations have more wealth than most countries in the world, and they also skew public opinion. Essentially, they only put in front of people news and whatnot and information that they want people to know, right? So it's kind of like mass brainwashing in a way. And also with the advertisements and this and that, they push agendas, right? And also they could become more powerful than governments themselves in a way. Because if they control the masses' thoughts and minds, right? Which traditionally, I mean, governments are in cahoots with these corporations, right? The question is, who's running who? And either way, it's very bad for society and freedom and everyone. Neither one should be as big as they are right now. Not the regulars, not the private monopoly corps. And now they're competing. They're starting to fight one another for absolute power. The only answer to all this is free market. And we don't have a free market. We haven't had a free market in decades. And what does free market mean? It means like no laws. So will that happen? I don't know. Probably not. And it's because I have no faith in humanity. Because average people, I don't know. They just stick their heads in the sand. So how's this going to affect the markets? Well, the FANG index here and the FANGs, their market share of the entire stock market here and the NASDAQ is so big. If this antitrust goes through and they start actually breaking up these monopolies, that's going to really dump the market. And see how this works? And the government doesn't want that either. So I don't know how they're going to go through with actually doing anything. Because if they break up the monopolies, then the market falls, and then revenues drop for the government, taxing these corporations. So it's funny that Trump is doing this and bringing this up, but to what extent can he actually even do it? Because as these big monopoly corps go, so does the monopoly gov, right? So it's interesting. So either way, this is, I guess, negative for the stock market. It's positive for humanity and future progress and productivity and growth, but it's for the short term and intermediate. See, that's the thing. People need to understand this. For your children and for the next 20 years and few decades, what needs to happen is short-term and intermediate pain that most people are not willing to go through and probably wouldn't be able to and wouldn't be able to stand it, or that's why I say the market has to correct. It should correct it. These companies, they should be broken up. All this should happen. It will happen eventually, but will it? The question is, will it happen now? Will society, will people in society and governments do the right thing and do what's necessary? More than likely not, because it's too painful. So kicking the can down the road and letting all this madness to go on for the long term, what'll happen is eventually these monopolies and everything, they become so big and so parasitic. Economies as a whole, the global economy cannot support this, and then it'll just come to a screeching halt crash, and then but that'll take years to play out. And in the meantime, these monopolies and everything, they destroy the global economy as a whole, because there just will be less and less freedom, less and less small businesses, less and less productivity. So one way or another, I mean, the breakups will happen. The question is, will we do it now and take the pain, or will this just continue? I think this will just continue for the next 5-10 years, and then eventually it'll just come all crashing down like a house of cards, and then it'll be Mad Max, and then the cycle will come full circle. These are cyclical, right? This has happened over and over again with Standard Oil and all these other corps. So I just want to touch base on that. Oh, another thing, I almost forgot. Someone commented on my... I will get into the prices and the TA. Someone commented on my last video, Harry Dent. So, Harry Dent. Is that his name? I have the book over here. I've read his book. Let me see if I'm getting his name right, because that sounds like the Batman villain. So he yeah, this is the one, Harry S. Dent. This is the book I read. I didn't read the other ones. Oh no, I actually read this one as well. So I did read two. Or maybe I read this one. Well, I listened to them on audiobooks, and I've done that for years, and I know I've gone through two of them. Anyways, I agree with like 95% of everything he says with the cyclical stuff. The baby boomers are aging, and everything is unsustainable, and when they retire, they're not buying things like they used to, and they hold all the wealth. And then when they stop buying things and they spend all their money on pretty much healthcare, we're going to get a huge economic reset in the US and the Western world as a whole. I agree with all that. The problem is he says that metals aren't going to go up and we're not going to get inflation. We're going to get deflation and like a 1930s style depression, which I also agree with. We probably will get a 1930s style depression. The problem is we're still going to get inflation. Why are we going to get inflation? I mean, it's very simple. I don't know how he doesn't see this. Hold on, let me find this. Visuals. Oh, let me remove this real quick here. I have to remove the fair use. Can you guys see? Alright. Good thing I didn't forget about that for when I go through the TA. So, okay, there's going to be inflation. Do you want to know why? Because of the national debt and all of the entitlements. If we have a deflationary depression, right, that wipes out people's debt. Or no, it doesn't. Actually, no, it doesn't. It doesn't wipe it. Sorry. If we have a depression style collapse coming, right, what'll happen is the debt doesn't get wiped away, and government and all the entitlement programs and the national debt can't be paid off. And if the dollar, that would mean that the dollar strengthens or stays where it's at. So that would mean that everyone loses their jobs, right? But then they can't pay off their debt. And then also the tax revenue for the government, it drops. And then they can't pay out all the debt that they owe, not only to foreign countries and whatnot, but they can't pay out all of the entitlements, all the free stuff they've promised in the past decades, right? Social Security, Medicare, and all that. So that's not going to happen. I mean, so it's either the government defaults or they inflate away the debt. So they either pay out all the debt and they don't default, or they default and they just don't pay out all the promises to its own citizens. Okay, so foreign debt, I mean, the U.S. could default on that, no problem. And Trump has actually slipped and said that during the election in 2016. So I do expect him to do that. Although China's not that stupid. China could go sell $1 trillion worth of debt right now and just crash the U.S. economy. But that would equal total war. Like, that would mean that the U.S. and, we would actually see a hot war. So I'm afraid to say certain words, guys, because I feel like my channel is going to get deleted. Anyways, but yeah, corporate tax revenue, look at it right over here. That would just disappear. So that's what I'm saying. Tax revenue for the entire Fed would just disappear because the corporations would just implode because they wouldn't be able to pay off their debt, and they've been buying back stocks. So the easy way out is to just keep printing money until we get inflation. Listen, they kind of want inflation because that means that these big corporations and the government still get their money. The problem is, once the inflation gets too high, it really destroys the economy. And that's why there's no way out. That's why it's damned if they do, damned if they don't. It's going to be sort of an Armageddon type of Great Depression with inflation, which will be stagflationary, meaning no jobs and just prices start going up and up and up and up and up. I think they're thinking that they could print endless money and sort of balance the inflation to the point where it's only around 10% every year, which is still horrible. It's like you're getting a 10% pay cut every year, but it's not at the point where people will go out in the streets and just riot endlessly. But it will get to that because at one point it's just none of this is payable. So in the end, I think everyone who wanted free shit is just not going to get it. They'll get the checks, but they won't be able to buy anything with it. I don't know, guys. This is uncharted waters. I don't know where this is going to end. I don't think they do either. And I don't think they know what to do. And all they know is to buy more time until they get out of office or they get out of power, and then they just I don't know, fly off to their bunkers or something. I really don't know. That's all they know. All they know is to keep power and buy more time until they see that everything's falling apart, and then they're just gonna exit. This is uncharted waters. Maybe they're hoping they could pull off a Japan, right? Just have no economic growth and just keep printing money and have stagflation for decades, and the economy just slowly deteriorates. That's what they're hoping. That's not going to happen because the debt is so large. Private sector debt, it's out of this world. Public, it's out of the pensions. Pensions are tied to the stock market. That's why they're going to keep printing money. Because they can't let the stock market fall. If they do, the pensions blow up. And then when the pensions blow up, that's when you get mass civil unrest. So, I don't know. Also, bonds, treasuries, the way they're going to react is they're going to try to force interest rates higher no matter what the Fed does. And that'll just blow up the market. And if the market goes, the bonds go. That's the problem. That's the problem when you build a Bernie Madoff type of economy. All right, so that takes us to TA. I'll post this in the newsroom and the free chat rooms. This article, it's pretty good. And they're going to hemorrhage money pretty soon, and maybe they'll have to back off on censorship. I don't know. Or maybe they're just ready to... This is total warfare. This is like Monopoly Corp versus the Fed right now. Or Trump. So, stock market's slightly up today. By the way, it's Thursday, 6 p.m. Eastern Standard Time, U.S. And June 13th. UTC is... What is UTC time? Will you load? It's 1800. Alright, here's gold. I'm hoping for a pullback. And it's just shot up today, and I'm kind of worried that it's just going to keep going higher because tomorrow's Friday, and I'm sure speculators are going to sell and not hold over the weekend. It's a bit risky right now. I think it's risky. Here's another gold chart. This is a weekly chart. You can see that gold's in this triangle right here. And I'm hoping it'll pull back and not break out of the triangle and retest the bottom part of this triangle, right? Where you have these moving averages and you have a lot of buying volume. So within this bright green rectangle I put here would be the perfect pullback. And this would if it does pull back, I don't know if it is, but if it does pull back anywhere between like 12, I would say conservatively 1260 to 1230, I'm going all in personally. That's what I'm doing for mining stocks. But I'm worried it's just going to keep rallying here. Especially if Friday the market sells off tomorrow, and then what is it, Tuesday or Wednesday, the Fed has the FOMC meeting and they capitulate and cut rates. If they cut rates, it's just going to launch. Gold's going to take off like a rocket. So I'm worried. That'll be June 19th. Today's the 13th. So 14, 15, 16, 17. Yeah, it's like Wednesday. So this is the weekly. We also have a 3 count. And look at this wick on this week's candle. And if tomorrow's stocks sell off, it's gonna look like a hammer, and it's a 3 count. It'll be a 3 count above the 2, and it's breaking out of this giant triangle. And once it's above like 1350, it can start really running to 1400. And then your mining stocks, they're really gonna take off. So tomorrow's sort of between Friday, tomorrow, and the FOMC meeting, like I think it's Wednesday or Tuesday, one of those days, the 19th. We're going to find out if gold's going to go into a bull market like right now, or we have maybe a few more weeks left, maybe a month left before it does. Because I guarantee you they're going to cut rates by the end of this year. If not by the end of this year, the beginning of next year. All right, it's going to happen within the next 6 months. So I'm thinking it's either now. Just going to, it's either now or we get one more opportunity and it pulls back somewhere, maybe to 1300 only, or hopefully back down to around 1240. That'd be the best. I hope it does pull back because I want to buy more mining stocks. This would be ideal. And I think this is still likely because I feel like they're going to smash metals right before the FOMC meeting and maybe afterwards. And then it's kind of like a false breakout. Maybe we'll go and retest like 1360 and then it'll break down and crash because maybe they'll talk hawkish a little bit, but they won't cut rates. And then, they'll smash metals again, hopefully. And then we'll get that one last buying opportunity. and then off to the races, I believe. I believe. So that was gold. And silver will go with gold. Whatever gold does, silver and gold will go with it. Also, looking at gold versus the world currency index. I believe I said this in my last video. It's a huge cup and handle. So, gold versus all fiat. Or major fiats. Huge cup and handle. It's definitely going into a bull market. Like, probably by soon. I don't know exactly when. I mean, it could be next week. If they cut rates like next week, it's taken off. All right, guys, you're gonna miss the train. Here's all of the gold, silver mining stocks, ETFs, and they're confirming the move in gold. They're going back up. I was hoping it wouldn't happen like this week, but you know, it's not easy. Smart money's waking up, or maybe some Wall Street's waking up to the reality of the situation here. Here's Dow Jones. So the Dow's on an 8 count. This is a daily chart. So we're going to get a 9 count tomorrow, and then it's going to sell off and pull back. You go to next support area is 25,500. And I think it's going to do that. I think it's going to pull back at least to the 23.6 fib retracement of 25,500. There's also a lot of moving averages down here, and it's going to retest them. Here's an S&P chart I drew last. Here's the Russell 2000. I like to look at the Russell. It's 2,000 like mid-sized companies. It gives you a better gauge of the market and the strength of the economy and everything. The smaller moving average here, the 50-week moving average, is going to cross the 100-week moving average. This is a weekly chart, and it could drop the price easily back into this giant triangle, descending triangle. And then it'll fall below the 50% fib retracement and take you to possibly the 200-week moving average, which would be around 1,400 on the Russell 2000. Let's take a look at the daily real quick. Daily's on the 7 count, so it's going to go with the Dow Jones, the S&P 500, and the NASDAQ probably, and fall back into this triangle. And yeah, I mean, 1,400 looks. I think Russell's going to fall back down to 1,400 in the coming days and weeks. Here's the NASDAQ. NASDAQ has been leading the charge in the bull market. It made a higher all-time high recently, while the Dow Jones and S&P 500 couldn't make an all-time high. Just by looking at this real quick, if you do, I hate Elliott Wave, but you know, there is some degree of truth to it. And then you have the, so A, B, C, or 1, 2, 3, whatever. It's so subjective. That's why I don't use it. Same with wedges. They're subjective. Now, on the NASDAQ daily, you have the 50-day moving average acting as resistance up here, and guess what? It's also on the 7 count. So it's probably not going to break above 7,500. It's going to get rejected, and we'll get a 9 count by Tuesday, and then it should drop. Now, why would the market drop by Tuesday or Wednesday? Now, TA is telling me it's going to drop. TA is basically telling me that when we get that Fed minutes on Wednesday or Tuesday, they might be a little hawkish, and they're not gonna lower rates, and the market might not like that, and it's gonna start selling off. That's what TA is telling me. That's how like TA predicts the news events. And I think that's what they're gonna do at the meeting. They're not gonna lower rates. They're not gonna raise rates either. If they raise rates, no one's gonna expect that, and the market will tank. So they're just not gonna do anything, and they're just gonna talk. I will probably record it and give you guys some of my commentary on what Jerome Powell says, and it'll be a good FOMC. So they might be slight hawkish. That will send gold back down, and the market will pull back and drop. And then I think later in this year, they will finally capitulate and start cutting rates. They see the same charts as I do. They're probably okay with the price dropping. So on the NASDAQ, they're probably okay with the price dropping down to like 7,100. And that's when they will maybe come out and cut rates. But the problem is this could happen quickly, right? This could happen very fast. So it could, in 4 days, it could drop all the way down to 7,100 real quick, right after the FOMC meeting. That'll take you to the 38.2 fib retracement. Realistically, it's going to come back down to 6,300 on the NASDAQ. And maybe they're okay with that, right? Maybe the Fed's like, well, we could handle a drop back down to retest the 78.6 fib retracement. And it'll hit major support, because that's major support down here. Or maybe they're only okay with it dropping to 6,500. Sorry. 6,500. And this is when maybe they will start cutting rates, talking about cutting rates. And they're kind of okay with the market dropping down to there. And then they'll cut rates, and they're thinking, it'll go back up. Or maybe it won't be enough, right? It won't be enough, and then they'll come out with QE4, and maybe it'll just rally up till here somewhere. They'll come out with QE4 after it drops. So let me get here, so you guys don't get confused. So they're slightly hawkish. They're not cutting rates this FOMC meeting next week. Market drops. Then they cut rates. Market rallies. But it doesn't rebound and start making new highs. It fails to make new highs. Then it drops back down. Then they start doing QE4 or something. Or they cut rates again. Or maybe this will just go sideways for a while, and then later in 2020, right before the elections, they'd come out with QE, and then the market starts making new all-time highs and does a melt up for like a year or something, or who knows. All right? And I'm just talking out of my ass. All right? This is how I think. I'm not saying any of this is guaranteed. I'm just seriously talking out of my ass right now. All right, guys. This is game theory. I'm just trying to think what are they thinking? How is it? Because literally, I mean, I use TA, but at the same time, I kind of have to anticipate what the Fed's gonna do, and what Jerome Powell's gonna do, and Trump's what he's gonna do, and at the same time, there's tariff wars and possible hot war coming in the Middle East. So I don't know. You guys understand? It's complicated. All right. So this is why I continue to make videos, and I'm gonna keep you guys updated on what I think. All right. I don't think they're gonna let the market drop too far. All right. At the end of the day, that's what I think. And at the end of the day, I know gold and silver is going to just go higher and higher no matter what happens. Like I said in my previous videos, it doesn't matter what happens to the stock market. They're going higher. If the stock market falls too much, metals will go higher. Stock market falls and they prop it up and make it go higher to new all-time highs. The only way they could do that is with lowering interest rates and QE or money printing. So metals are going to go higher with the stock market. It's that simple. All right, FANG. FANGs. The FANG index. It's on a 7 count. It's already pulling back, mainly because of the antitrust. And as soon as 3 days ago, it started pulling back. This would have been a perfect and easy short because of the antitrust. And you could short this index if you wanted, the FANG. I should have done that. Lately I've just had a lot going on. I'll post some new trades for next week for the private members of MMG Invest. Also, all those IPOs, Zoom and this and that, they're probably going to pull back with the market. So Tesla, it's on an 8 count on the daily chart here. It didn't even make it to 12:30. I was hoping it would. So tomorrow morning I'm probably going to add another short position on this. I'll keep you guys posted in the MMG Invest private group what I do. What is this? Waiting for it to load. Okay, so here's Europe. Europe's going to go with the US equities. And they're probably going to test all these supports, right? This is the UK Index 100, the FTSE Euro Top 100, DAX Index, and the CAC. So they're all going to go and retest support. Here's what's funny, though. If they do that, it's going to start looking like head and shoulders for a few of them. I think Europe's going to go down before the U.S., mainly because of Brexit and the Eurozone breaking up and all that. I don't do Forex, but I don't know. I don't feel like shorting the Euro, but, if you do Forex, that's probably a pretty guaranteed short. I don't know. You decide, but if I traded Forex, which I hate Forex trading, I've never even traded Forex personally. Here's a 10-year yield. I'm watching this. This thing just keeps falling. Again, yields are signaling some sort of recession, depression, right? So there you go. Come to MMG Invest. Just go to your search bar here, MMG. And I've compiled some data and research for you guys for mining stocks to help you with your own research. It's outdated. It's very outdated, but I think it's still good. But you guys, I watched this video. I put a lot of data into it, and it could help you with your own research for mining stocks. I have a bunch of royalty juniors on there. Even micro caps. Don't invest a lot in micro caps. Like, throw $50, $100 there in micro caps. They're really risky, but you never know. One of them might pop someday, and you'll get lucky. But the juniors and the royalty mining stocks, they're gonna do great, I think, in the long term here, in the next 3 to 5 years. So there you go. Smash some likes. Leave anything in the comment section. Let me know if you want me to cover something. And some of you guys have great ideas that I could talk about and cover, right? And share my videos. It's the only way my channel grows. Until next time.